Well, it's time to talk business with our partners. 2 degrees, the last full week of trading for 2025 gets underway later today. What are the markets expecting from the pre-Christmas data dump? Garth Braid joins us from Business Desk. Hey, great to have you with us this morning, Garth. So, is this going to be a pre-Christmas present? Are we expecting any green shoots, or is it going to be dull and as bad as what we had in the last quarter?
Yeah, well, which wasn't great, was it?
0.9%. So, but are we going to improve on that?
Yeah, well, look, it can only improve on it. It's a question of how much, I think.
Yeah.
What we get at this time of the year, because this is the last GDP reports on Thursday, that you get the economists at banks sort of shaking the Christmas tree boxes and trying to work out how big the present is that they're expecting to get. And they're taking some partial GDP indicators that they've had over the last little while and brewed up an estimate. They think of around up to 1% increase for the third quarter, the quarter through to September, and that's ahead of what the Reserve Bank is sort of picking at the most recent monetary policy statement back in November. That was about 0.4. So they are presumably...
We're just going to put a new mic on you there, Garth, because apparently we cannot hear you. So we'll just stand...
Not because I have got tickets on myself.
No, we need to hear your reckons, mate. So sorry, carry on.
So the gist of that being, I suppose, that you're getting the economists trying to get the size of the thing right and saying that they, based on the evidence they're seeing, are picking that the economy could have grown by twice as much as what the Reserve Bank picked it would have in that third quarter, and that's a sort of a further indication that we're starting to see momentum pick up. It does suggest, if that's where it comes through later this week on Thursday, that we would start to see that easing cycle would definitely be over, and you'd be seeing the justification for some of those rates, the longer term rates that banks have been putting up, come up. Really lock in, because that'll be it for cuts, presumably. I mean, some of them are even talking about a return to interest rate rises by sort of December next year.
So is this going to stave off kind of the criticism we've seen of the current government in terms of so-called economic mismanagement, or is it going to still leave room for Labor to be smashing them all the way up to Christmas?
Well, we'll get some more evidence about that probably on Tuesday when the half-year economic and fiscal update pops out, and that's really the government opening its books and predicting whether or not it's likely to get to its predicted surplus. I think what we're talking about, sort of 2029, is probably where we're looking, aren't we? Could be a little bit longer even. So that's a 28, 29. It could be that's an opportunity for a gap to open up there in credibility if that takes longer, because we have seen some softer data reported on company tax returns and so on, and obviously there are real spending pressures on. It's an election year next year, so they've got to try and get that sort of that magic triangle of maintaining spending on infrastructure, maintaining the tax take where it is, and not reducing services. You've always got to give on one of those, haven't you?
Yeah, the ever elusive magic triangle, of everything. Okay, so some of our biggest companies are weighing the value of reporting on climate disclosures.
Yeah.
What's happening there?
So this is a carbon catch-up, something that Business Desk takes a look at, because there've been compulsory climate-related disclosure. A lot of our big companies for quite some time now, anything over 60 million market cap. Current government's looking at pushing that up to 1 billion, which really would lift the ceiling, would mean a lot of companies don't have report, and some of those that do, like Mainfreight, are saying, well, that's going to diminish the value of us having to do it if you've got fewer companies to compare and see what's going on. But the costs here are pretty substantial. You're seeing, I think Mainfreight mentioned in this, they're spending sort of 250 grand a year just to tot up all of its various different emissions, budgets and so on, and report those disclosures. I mean, some companies at highest scale are up, it's about 400k. Some of them are spending some pretty big money. They're saying, look, it helps because we can go to our customers with a good story, but the investors, they don't seem to show much interest. We don't know that we're necessarily seeing the value of being able to report those disclosures yet.
Okay, and just finally, I want to touch on this news about a financial advisor who's made a bit of a virtue out of a scolding from the regulator. He's sort of turned it around, hasn't he?
This is how to turn your frown upside down, I suppose, sort of 2025 styles with social media. So this is Opes Partners, which is a Christchurch-based investment firm that focuses really on the property market. And they were censured last week on Friday. Basically, the Financial Markets Authority said that there were some shortcomings in its record keeping, how it ensures client understanding of advice and management of conflicts of interest and oversight of advisors. No one lost out, but it needed to do a much tidier job. Now, most people would kind of just maybe respond with one press release. They had a podcast ready and minutes before the FMA had even put its little press release out for journalists like us to read, they'd done a podcast previously earlier in the year explaining that they were having a compliance visit, which is normally something you keep quiet, but they'd sort of made a bit of a go out of it. So is this radical transparency, or is this what we're seeing, I suppose, with some firms really flooding the zone with communications?
Are we seeing more of that? You know, companies that get into strife and they, you know, they go out there and
refuse to be shamed.
Yeah. I mean, is it quite a good tactic?
Let's see how it works for these guys. I guess it depends on what people make of that. If investors still keep turning up, if it diminishes the sort of the negative message that a regulator is putting out, I guess when we're taking a look at this as a business desk team, we're sort of starting to wonder whether the FMA maybe has the tools for that sort of, or has the approach right, because it's still kind of stuck in maybe an older age of regulation where it was trying to, just was assuming that sort of if you got the disclosures right and so on, people would be happy. Now